Good morning. This is episode 2 of the Broker Bros podcast. And today we're talking all about the importance of regular income, right? So we're gonna have a chat about why we all need income, the importance that plays in our lives, not just in terms of today, but also all our plans for the future. I'm delighted to say we've got our Broker Bro regular, Adam Mechial here from Blackline Wealth, myself, Matt Chapman from Plus Financial Group. We've also got a special guest today, Adam Kaplan from Pendragon Protect. He's here to talk to us, and he's a prominent advocate of income protection. So we're really keen to tease out of him why he thinks income protection is so important, why it plays such an integral role in providing holistic advice, which is the thing that we all keep saying is the most important thing. So hopefully what we're going to do today is answer a couple of questions, both from an advisor point of view. So if you're an advisor and you're looking to recommend more income protection, you understand why the importance of regular income plays such a pivotal role in what you do and the advice you give. But also if you're a consumer and you're not sure why you need income protection or how it works, what it's all about, hopefully this will answer some of your questions and deal with some of those things that are niggling in the back of your mind as to why you think you ought to have it or maybe not have it. And we'll hopefully do that today. So welcome both of you. Welcome, Adam. How are you today? You all right?
Yeah, very good, thank you. Really excited to have this chat with you guys. Maybe time.
I can see, we're very casual. You're very formal. It's all good. It's all good. No, it's very professional. We're really, really pleased to have you on, and thank you for taking the time out to speak to us today. So,
thank you.
I think Abs and I are going to kind of ask you a couple of questions, if that's okay, because I think from our point of view, obviously, I'm very much like you. I'm a protection advisor principally, and I'm a strong advocate, much like you. So you and I think very much like, I know in conversations we've had in the past, we've talked about why income protection and protecting your income is like the foundation of everything you do. Because I mean, even if you think about, if you took out life and critical illness insurance, for example, it's your income that pays for those premiums. So it's really important to do that at a very base level. But I'm going to ask you a couple of questions from my point of view, both from advisor and consumer perspective about income protection. I think Abs, being a wealth planner, financial planner, is going to probably talk to you about how the need for income is so integral in everything they do and all the plans that clients have both for now and in the future as well. So did you want to start with a couple of questions, Abs? You got anything you want to ask Adam about financial planning?
Yeah, so I think what would be quite good, Adam, is all of us are client facing in one way or another, and we've spent lots of our time dealing with clients. So I think the first thing, and what I always find the most interesting, is everyone's sort of different experiences with different clients. So I think it'd be good, Adam, if you could sort of give us an example of someone you may have dealt with or spoke to recently, and why income protection might have been prominent within that conversation, and how it was really important for you and from your advice perspective.
So, well, just thinking about the guy I had yesterday, he does have income protection already, something we set up for them sort of 3 or 4 years ago. But yeah, just got in touch and said that, I don't think I need income protection anymore. They've got a bigger mortgage. They were looking to increase their life insurance, understandably. But what I found very strange was that he felt he didn't need income protection. And then when we looked at all their outgoings, the mortgage, and then all the debt, so they had car loans, they had personal loans, they had credit cards that amounted to just under £2,000 a month. I was kind of flabbergasted to actually sort of, I said, why do you think you don't need income protection? So I sort of found that conversation very, very odd. So I guess I'm not too sure if that's kind of where you were leading with that question, but I don't know if that's for you.
Yeah, I think between us, we all have sort of different areas that we help our clients. So from our perspective, we're looking to meet their financial objectives long term, whether that be for retirement, growing their money and their investments. And I think Matt talks about, he primarily also looks at protecting his client's income, and maybe from a mortgage perspective to make sure that they can carry on paying the bills. So I think the general theme between every advisor in our space is, without your income, you cannot achieve any of those objectives that we're setting out for you. So I think it's good to understand, the common theme here is, what does income play in terms of achieving all of your financial objectives? And if it is the common theme and the most important part of achieving all your financial objectives, why are people, more particularly from the scenario you've brought up, why are people overlooking the importance of protecting that income? So I think, going back to you, and maybe Matt may have an additional question to that, what did that client in particular feel was the reason he didn't need to protect his income? What did he perceive would keep his income going if he couldn't work? Or were there any examples in his life where someone he knew had their income stop and they were able to sort of live without that income?
I don't think you can answer it, because I the first question I asked is what makes you think you don't need income protection?
Yeah.
And it kind of threw him a little bit, because when we went through all the outgoings and then talked about his partner, I was about to say wife, I don't think they're married, but his partner, who we did review their cover last year, and she was signed off with work, and actually she was postponed being offered any new cover for any kind of critical illness or income protection. And then on the life insurance, they were going to increase her premiums as well. So I was like, that's a prime example of why you do need income protection. And then sadly yesterday, she literally lost her job as well. I'm like, I don't understand personally why we're even having this conversation. If I didn't obviously word it like that to him, but I just said, look, what makes you think you don't need it? But there was kind of like justification, or I need life insurance, and I think that boils down to sort of not enough awareness around income protection personally, even though they've got it, which is obviously what we did for them. But when I then looked at the risk of them, actually, I did this live with him. We did a Teams meeting, and I did a screen share with him. And the reality of him actually dying between now and the age of 70, which is when the mortgage goes to, was 7%. Yet the reality of him claiming on income protection was 38%. So I'm like, that's what, 5-6 times more likely to need income protection than life insurance.
So I'm really intrigued, because obviously I deal with very similar clients to you, and I have these conversations as well, Adam. And I think you've raised a really interesting point, which is if you've got a client there, and I think this is what we need to try and overcome. We need to try and get to the root cause of what's going on here, because if you look at that situation, you've got someone who in their own household, his partner has been impacted by a loss of income, and he's still not able to see how reliant he is on that income. I really struggle with that. And I think maybe what it is, it's a combination thing. Maybe it's a financial education thing. Maybe it's like when we're younger, we're not taught about income, the importance of income, maintaining income, why income's so important, whether it's getting credit or whatever. And I also think in our industry, there's a couple of misconceptions. I mean, I've briefly touched on the fact that, we talk to mortgage customers about the importance of maintaining their mortgage payments. But the same applies to renting as well. I mean, at the end of the day, in fact, if you're renting, you're probably at higher risk, because if you're renting, there's not much to fall back on. It's not like you can go to the lender and go, well, I can do a bit of a payment holiday, because you've got a private landlord potentially who's going to turn around and say, look, I'm not interested. It's not my job to make sure you're okay. You can't pay, you're out, and I'll get someone new in. And, we've all got horror stories. I've got a horrendous one, which I'll share in a bit, about how income protection can essentially lead to homelessness if you're not doing it right. And I've got an amazing tale to tell you both of it. It's very, very heartbreaking. But I think it's really important for me that we understand, what are those barriers? Why are people not seeing how important income is? And I guess if we look at the current situation, so we look at the pandemic, and this time last year, we were all told, right, we can't go to work. Okay, we're told, like, sorry guys, we're in a lockdown situation, you can't go to work. If you can't go to work, what we're going to do is we're going to give you furlough, which is essentially a glorified national income protection contract. We're going to replace a percentage of your income because you can't actually go out and work and earn an income. And albeit it was done convoluted through businesses or whatever. But the fundamental thing there is, what I'm trying to glean from it is, Rishi Sunak didn't go, oh, look, everyone, here's 100 grand, here's 50 grand, right? He said, look, we all need a regular income because the bills just carry on every month. And if I've said this before the call, didn't I? If I looked at my bank statement, and if you said to me tomorrow, Matt, your income's going to stop, and I look at what comes out of my bank every month, I'd be in real trouble pretty quick. I mean, I live hand to mouth anyway, and I'm a financial advisor, right? That's what's scary. But the truth of the matter is, we all go about our day just assuming that income will carry on regardless, right? There's no thought process that goes, actually, something's going to happen to me when we stop income. Then the pandemic comes along, gives us all a wake-up call. You need regular income. Here's furlough. You need it. I know you need it, because if I didn't give it to you, you'd be broke. You wouldn't be able to feed your family. And yet you're still having a conversation with someone who goes, I don't think I need income protection. Now, why do you think that is? What is it about, whether it's us as advisors, providers, or consumers, that's not landing that message properly?
Well, one thing right there, and again, I'll take it back to the guy yesterday because it's fresh in my mind, is what is income protection? People don't actually understand what income protection is. Really, and actually, one thing I learned recently, so I do regular, like yourself, Matt, I do regular presentations, I do training to other advisors, I do presentations to local businesses through the chamber, and part of my presentation is that I literally get everybody in the room. So who's got car insurance or some kind of vehicle insurance? Who's got house insurance? Who's got pet insurance? Who's got mobile phone? And everybody puts their hands up. And then I do like a little illustration thing on the screen. It's quite cool, actually. It's quite powerful. But then I say, who's going to pay for all it? Who's got human insurance? And actually, income protection is human insurance, or it's pet insurance for humans.
Yeah.
That's the way to look at it. This guy yesterday was paying 118 quid a month for his dog, yet doesn't feel he needs income protection.
But what pays for the dog insurance, right?
Exactly. But then again, let's take this back to my very first presentation I did a few years ago. And some guy in the room put his hand up. I think his name was David. I'm not 100% sure. So I said to him, right, why have you got pet insurance? And he said, well, just in case my dog has an accident or gets ill. And I was just like, you could not have worded that any better. Hold that thought, right? But then when I went on to so who's got income protection then? Human insurance. He kind of put his hand up. So I was like, hang on a minute. So you've got pet insurance in case your dog has an accident or gets ill, and you might have to pay a couple hundred quid or £1,000. But you haven't got that same insurance for yourself, which costs you thousands of pounds a month. And literally the face was just like, it was a reality check. And that is what's really powerful when I do these presentations. I call the presentations putting insurance into perspective. And you need to put this into perspective for people. But for me, income protection is human insurance, or like I said already, pet insurance for humans.
So here's a great one for you. Sorry, I was going to say, mate, I've got a really, because I'm conscious that you've just touched on something really important, which is we're making assumptions that people watching this podcast actually know what income protection is, right? Yeah. We're all talking about this thing, income protection, isn't this really, really good? So do me a favour, Adam, if you wouldn't mind, sorry, Ab, you can pick up a second. If you wouldn't mind very quickly, just for those who are watching that maybe don't even know what income protection is, could you just summarise at a very high level what income protection is so they actually understand what we're talking about?
So income protection replaces a proportion of your income in the event of any accident or illness other than certain pre-existing conditions. So depending on your medical background, there might be certain conditions that you've had within the past 5 years that may not be covered, maybe permanently, or in some cases, certainly the industry's changed for the better recently, but you may have a temporary exclusion on. But ultimately, the contract in itself is designed to pay you a regular income for as long as you need it. So some contracts will pay for as long as you need it, or for a certain period of time, if you cannot work due to any accident or illness.
Wow. I think that was perfect timing, because one thing I was going to say that I took out from both what Matt and yourself, Adam, were saying was it's our responsibility at the end of the day, that we know that there's a gap, and then we know that this product is not being provided as much as it should do. And ultimately, we are responsible, and we need to figure out why, and what Matt said this earlier, why is this product that's essential not being provided to our clients? And we have to take ownership of that. And I think from what you've both said, I see two aspects here. And one of them is education. Do our clients know this product exists? And if they don't, what are we doing to educate them about the need before we talk about, what this product actually is? And I think the second piece as well is, and what I found works really well is, I think sometimes we may underestimate the people and the clients we're talking to in terms of how much we can just be upfront with them. And what I found really works is, before even talking about any products, I would just talk them through what I'm thinking as an advisor. And what I'll say, and especially from the perspective of wealth, is I will say, for us to achieve all these plans for you, for us to make sure that you can retire and earn this income at this age, for us to be able to grow your investments or pensions to this goal that you want to achieve, it is heavily reliant on the regular income we're putting into these pension investments. Now, what happens if that stops? So if your income stops, I myself, as your advisor, cannot do my job for you. I can't achieve these objectives. So we need to figure out a way of making sure this income doesn't stop. The way for that is to make sure you do what you're good at and bring that income in from the work you do. But what happens if you can't do that work? So I think it's two pieces. Firstly, educating our clients on their risks. And secondly, being honest and saying, if you don't find a way of making sure this income comes in, month out, I can't do my job for you. And that's not just from a wealth management perspective. That's not just from, for obvious reasons, from a protection perspective, but also from a mortgage perspective. As a mortgage advisor, if your client can't pay their mortgage, then that is detrimental to them in every single way. So I think it's, two things. And I'll put it back to you, Adam, just to get your point of view on this. But first of all, just being honest with our clients, saying if you don't look at this area, then all of this falls down. And then secondly, educating them on what the options are to make sure there's a solution there, and then introducing the product. And Matt rightfully said, we're coming from this assuming that everyone watching this or everyone out there knows what income protection is, and they don't. So I think putting it back to you, Adam, just to get your thoughts on that.
Yeah, I think you made a really valid point on the education. And the first thing I thought is not just about educating the consumer, it's about educating other advisors. Because like I say, I've done some regular training, and I was sort of almost embarrassed the lack of knowledge that advisors have. And I think it's like anything, if we don't understand it, we tend to shy away from it. And I think that's what's happening personally, is I think advisors certainly, and I know this is going to go out to other advisors, and I say this with the greatest respect, but certainly mortgage advisors, they're busting their balls, working really hard full time to do the mortgages, and they don't probably have enough time or the right time or make the time to learn more about income protection. So it kind of does get put to the side and not understood, because well, I say it can be a complex product, but if like ourselves, we can explain it simply, it can be understood a lot better. But my sort of piece on the whole education is not just about educating our clients, it's about helping other advisors understand it more simply. It is probably the easiest way to say that, if that makes sense.
I think that's a great point. I think I completely agree with that, in the sense that like I said, going back to my original point, it's our responsibility as advisors to do the right thing by our clients. We can't expect our clients to come to us and tell us what they need.
Know what they want.
We need to go to them. And you're spot on that before the client's educated on what this product is, us as advisors need to know about it, and not just know about it, talk about it. Because if I'm setting up a mortgage for someone, that's not my area, but if I do, how can I be satisfied I've done the right thing for this client if I haven't guaranteed that this client can always pay their mortgage, whether they're ill, working or not? So I think it's a great point, and I know Matt's got some good ideas on this, but we can't expect our clients to know about a product that all the advisors that are out there don't know or talk about. So it's a great point.
Go on. Sorry, Adam, go on.
No, the other thing I was going to make is, and you kind of said something earlier about a client who I think lost their house. But one of my questions, and this is my understanding, and correct me if I'm wrong here, but my understanding is that more people lose their house, like get repossessed, so because they can't pay their mortgage due to illness and redundancy. Is that right?
I think so. Great.
I didn't know that, but that's a very, very interesting fact.
I believe that's it. I'm not 100% sure, but I
wouldn't be surprised. I wouldn't be surprised.
Yeah.
And I was going to say, I was doing some research recently with various different providers. Now, the ones I've spoken to have given me rough estimates. So this is obviously, when you're talking about advice that's given alongside a mortgage, traditionally, and I am being very generic, and again, I mean no disrespect to anyone here, traditionally, you tend to find advisors are recommending mortgage-related or debt-related insurance contracts alongside a mortgage, which to an extent is valid because you want to obviously protect the client against the debt. But what tends to happen is they're prioritizing these kind of like life event stuff, life insurance, critical illness, which is brilliant, by the way, because at least they've got some form of protection. Although I would go back to my point and question how they pay for that insurance in the first place with an unprotected income. But anyway, and they're recommending these products. And I was chatting to a provider and saying, right, just do me a favor. With a decreasing term, so this is a critical illness contract that's stuck alongside a mortgage, and it roughly goes down in line with the balance of the mortgage as you start paying off. And it's designed that if you get a life-threatening illness or a serious illness, such as cancer, heart attack, stroke, or MS, of those people that take out that policy with their advisor, and it's designed to clear the mortgage if you get one of those serious illnesses, what percentage of people actually use it to clear the mortgage debt? And I was really intrigued. It's on
Why do you say that? I was thinking this the other day.
2%.
I love that, because I know we won't name any insurers, but there was one insurer that in particular who did that exact survey. They basically contacted so many clients who'd successfully claimed on critical illness cover, which was related to the mortgage, and asked them all, so what did you do with the money? And guess how many people used it to pay the mortgage off?
Hardly any.
How many?
One. Literally, not one.
Really? That's crazy.
No, but listen, I'm not surprised. And the reason being is because ironically, what a lot of people do, and I think historically, I think it's changed now, but historically, people used to do conservatories and extensions, right? Home improvements, right? Which is really strange. But that tells, yeah, seriously, that was the number one reason that the money was used. But that, again, you go back to the point there, which is clearly what happened then. There's that product was designed in a way that the advisor or the client, or a combination of two, thought that was the most appropriate thing to do under the circumstances. But actually, it clearly isn't, because there wasn't enough analysis done into what is really needed by the client. And then the second main reason it's used is income replacement.
Yeah, that's the reason.
Lump sum product designed to clear a debt that's been used to replace someone's income because they didn't have any form of income protection.
Well, that was the number one reason. So this, again, go back to the conversation I had, is no one used it to pay off the mortgage, because they basically all thought, oh my God, how am I going to pay my bills? So they used it as an income.
Now listen, I want to be clear though. I do want to be clear. Sorry, Abs, I want to caveat that if you don't mind, mate. I want to caveat and say, look, I'm not suggesting people shouldn't take out that product, by the way, at all. I believe that product absolutely has its place, and I believe that it should be done in conjunction with. So if you've got a form of income replacement, fantastic. And then if the desire is to clear that mortgage debt in the event you get something like cancer, again, tick in the box, because what you're doing there is you're meeting the specific needs of that client. If the client's desire is, well, do you know something? If I got cancer, of course I'm going to get the income anyway from the income replacement. But do you know what? I really could do without having the debt in the background. Perfect. There's the appropriate solution. And then you know that they'd use it for that reason because they've got the income anyway. So I just wanted to caveat it. Absolutely.
Yeah, I'll caveat that as well. I would say that in an ideal world, everybody should have life insurance, critical illness, and income protection.
Yeah, and I was exactly what you both just said there. I was going to mention is the fact that at the end of the day, it goes back again. I'm not trying to sort of hammer advisors here because I'm one of them. We're all advisors here, and I'm putting my hands up, and this applies to me as well. But that's our job. You know, if a client has come out with an outcome that doesn't suit all of their objectives, if a client has received a lump sum and they're like, oh, what am I going to do for income now? Or vice versa, they've got an income but they can't pay the debt off. That's not the client's fault, unless they haven't got advice at all. Then that's their responsibility. But that's an advisor who hasn't completely done the full job, and you see it a lot. You see clients that are left with themselves having to pick up the pieces because the advisor hasn't done the best job, and that may just be purely down to the education, that they weren't aware of the full suite of products and didn't set them up, or they were too afraid of the cost it would have been to the client, so they never presented it in the first place. So I think the responsibility here is the advisor to present all the scenarios and the options, and then the client's responsibility to be like, look, this is costly. However, you know, if I don't do this, this is where I'll end up. And I think as advisors, I always ask myself the question: if worst case scenario, if this client went away with what I advised them on, what's the worst case scenario that could happen to them? And if they came back to me and said, this has happened, have I done everything I could have, at least to let them know their options? For example, if someone has set someone up with a mortgage, how would that mortgage advisor feel if 1 year's time that person came back and said, by the way, I can't pay my mortgage, I've been off work for 6 months because I'm ill? What would the advisor say back to that client? Or myself as in working in wealth management, if my client came back to me and said, by the way, I haven't worked for 6 months, I can't keep making these pension contributions, I can't retire at 60 now, I'm going to have to work for another 5 more years, what am I going to say back to them? So
yeah, I'll give you one. Income, outcome. There's the great analogy, right? Income versus outcome. Regular income, positive outcome every single time. And I was going to say, I know we're going to go, you can obviously explain what you're going to say in a second, but I was going to say, what we're forgetting here is we are focusing specifically on income protection. Yeah. But there is also family income benefit, which is another policy we'll probably go into in a second. But I think the underlying bit here, as you've alluded to, Abs, is it's just making sure that regardless of the situation, whether it be short-term illness, serious illness like we talked about, Adam, or even a death potentially, what we're doing as advisors is making sure that the household always has the income it needs so they can meet all of their liabilities. And it's not just the mortgage or the rent. We all forget, this liquid isn't free. Food isn't free. And those are basic human necessities, right? So I guess the point here is it's just making sure as long as you've got every month in your pocket the money you need to survive, that's a pretty good outcome, in my opinion, right? Adam, take it away, mate.
I've got 2 things on that. So going back to what you were saying, Abs, about how an advisor feels if the client is off well. I had that situation a number of years ago, and so I'm trying to remember, we are talking probably a good 10 years ago, maybe 8 or 9, who knows. But anyway, the client cancelled her policy.
Okay.
And so I tried to contact them to sort of find out what's going on. So I couldn't get on and dropped them an email. I said, look, is everything okay? And then she came back, word for word, that policy you sold me was a load of crap in capitals, CRAP in capitals.
Right.
And I said, look, what was happening? Like, so I had to have an operation on my back, and I've now been off work for so long, and that policy didn't pay out. I feel awful at this point because I'm like, she hasn't got income protection. So I look through all my notes, literally, and this is why, like, you've got to dot the I's and cross the T's here. So I look through all my notes and all my research, and I'd literally, I swear to you, and this is on my suitability report. So these figures are so weird. So she was paying £77 a month for some life and critical illness cover that was done through a tied mortgage advisor. So I went back and said, look, I recommend you do this option. It was life and income protection. It was £88 a month. But if you're adamant you still want the critical illness cover, I can get you a better policy. And it was 66. I'll tell you, it's so weird. It literally was 77.
Yeah.
What she was paying.
88, 66
was the critical illness cover. And then life and income protection was 88. And her exact words to me were, it's imperative I save money. So she chose to go for the life and critical illness cover. So it saved her 11 quid a month and got her a better policy. But when she came to claim, because she had a bad back, or she had to have an operation on her back, that's not a critical illness. And that, when you said what you just said there, just totally reminded me of that client. I haven't spoken about that client for years. That is a prime example of giving a client their options, but they haven't taken my advice.
You've then done your job. Your job isn't to sort of force someone to do something. Yeah. Your job is to give advice, and if people take your advice, great. If not, they don't. But can you imagine if you hadn't have said that?
Oh, I'd have felt awful. But the fact is, and I'm sure Matt will go with this, is ever since I've done this job, and I think we need to take this back to like when I found out what income protection was, but every person I speak to has a conversation about income protection, as simple as that. That's my job.
Well, I think that was going to bring me on to sort of my next point was, you know, I think every advisor within the community, you know, has probably the same experience or perspective we have on this. And I think, and the purpose myself and Matt, you know, decided to even do this podcast is because I think the biggest solution for this is, as a community, rather to work in isolation, to work together as a community, and just to just talk about it and get as many of these conversations happening within the advisor community as possible, to then generate the best outcome for our clients. And I think that is, you know, the heart of why we have created this podcast, is as it hopefully organically grows and gets out there in front of other advisors that can also have their input and have their idea of what may be a solution, because we need something to come in and improve the situation. It's getting better, but I think as advisors, from a moral perspective, we want to do everything we can to make sure that the market is a better place for our clients. And also the market is a better place for advisors, because some advisors, and rightfully so, do a great job with the mortgage or do a great job with the pension investment. They simply don't have the resource or time to go beyond that. And that's fine. But if we can create a community where we collaborate and we can say, right, I need my client to be looked after in this area, but I can't do it. I remember I spoke to Adam in a podcast, and he's great at talking about income protection. Why can't we go and speak to him? I think rather than seeing ourselves as competitors and trying to get an edge over one another in the advisor community, I think the more we do this and the more we work together, I think the more we can start closing in that, and it's cliche, but the protection gap. And there are lots of other areas, not just protection. You know, there are clients that, you know, will go and see someone about a mortgage, but not get any other financial planning beyond that from an investment or pension perspective. And then in 2 years' time, they're actually worse off financially and can't afford that home anymore because they haven't been doing anything with the money in their bank. It's actually been depleted. So I think that sort of is a solution that we're doing our bit to work towards. But
you know, it's a really good point, Abs, right? Because, you know, we are at the minute almost saying, oh, you know, financial planners and mortgage advisors really ought to be signposting for protection if they're not. But the same principle applies in reverse, right? So in the same way, you know, when we talk about income, household income, I see it in three ways. I often refer to it as income trifecta. It's income when you're alive and working, income when you retire, and income when you die, right? And I guess what I'm trying to say is, yes, income protection and family income benefit can sort of ring fence those. But essentially, it goes back to what you're saying, Abs, which is like, well, okay, what are we doing within the protection and mortgage advice community to signpost the importance of retirement planning to make sure the clients have the very income they need when they retire as well? Okay, we're doing work to protect them now in the immediacy of what goes on now. So, within the term and confines of what we're recommending, a 25-year or 30-year mortgage or a policy to the age of 67, great. But what about after that? Have you done enough provisioning today to make sure you can enjoy the type of lifestyle you want when you retire? Because I'll protect what we've got now. And obviously, in a sense, it's going to ring fence your ability to continue to make financial plans. But have we signposted back to someone like yourself, Abs, to actually give that advice to make sure that they're optimizing what they're doing and they have made those provisions in the correct way?
Yeah, completely agree with that.
I was going to briefly just say, Adam, so let me just ask you this question, because I think we touched on it, right? Abs mentioned, if someone says, it's expensive, and I really struggle with this one, by the way, because I don't believe that income protection is expensive. And it's just an opinion. It is an opinion. But if you look proportionately what someone earns in a lifetime, and I challenge everybody watching this podcast to get a calculator, type in your annual income and times it by the number of years you've got left, and you will be gobsmacked how much you earn in your lifetime. It will be more than a lottery win, I'll tell you that now. And I guess if that doesn't spark this need to protect that, because that's what you're worth essentially, I don't think income protection is expensive. So my opinion, but it's because I place huge value on the product, the service, and the ability to keep drawing income every month, regardless of what happens to me. But what kind of things do you use? If someone comes up to you, and I don't want to put you on the spot here, but if someone comes up to you and sort of says, oh, I don't know about that, or do I really need it, or it's a bit expensive. What kind of things do you say to a client to make them understand why it's good value for money, why it's so important?
I think you've got to use, certainly by understanding their own outgoings. I've got another fantastic case study for you purely on that. It's about using their own situation and helping them understand. So there's so many things that you can use. So if I use this case study, so I've got a good client of mine, her name's Emily, young, she's got a couple of kids, and she had life insurance, critical illness and income protection. She was paying 42 quid a month, right? So it's not a massive amount. She got everything. And rings me up, says, Adam, I think I'm paying too much for my insurance. So I was like, well, that's not possible, because we're not restricted to who we can use. Okay, right. Yeah, we're not restricted to who we can use. We're not single tied, so our premiums aren't rated. And you took it a few years ago. So the reality is the same cover now is going to be more expensive. So anyway, I took her through the exercise, and lo and behold, the same cover was more expensive. So at this point, I'd already also gone through her outgoings. So she was paying £25 a month for her dog insurance, and she was paying somebody, get this, £175 a month to walk her dog. So I swear to you guys, I swear, right? Yeah. I said to her, Emily, I said, right, I think I know you well enough now that I can talk straight to you here. So you're paying £42 a month, and it's going to give you hundreds of thousands of pounds of life insurance. I think it's about £70,000 serious illness cover or critical illness, and however much her income protection was. And literally that was until she retired, right? So again, you times the monthly benefit by all the years, you're talking hundreds of thousands of pounds. I said, and you're paying 42 quid a month for that. That's going to secure your children's future, secure your income, Yet you're paying £200 a month for a dog. And she went, and you might have to beat this out. She just went, Adam, I'll shut the fuck up then, shall I? And I said, I think you should, and we joked about it, but perspective, £42 a month.
Absolutely.
You've got everything you need to protect yourself, human insurance, yet you're paying 200 quid a month for a dog. And I understand there's an emotional connection to a dog, but why don't we have that same emotional connection to ourselves?
You can't carry on paying that for the dog without.
That's what I'm about to say. It's even deeper than that. And I often do that with clients myself, Adam. So I'll say, going through a bank statement is one of the best things you can do, because when you start scrutinizing people's direct debits, and I mean no disrespect, because I'm guilty of it myself, right? And I look at my own bank statement, I'm like, oh my God, I spent that on Domino's pizza, 50 quid. I'm like, bloody hell. And then you equate that up and you give your book, then hold on a minute, stop for a second. how did I even pay for the Dominoes? Let alone the fact that was an unnecessary expense. It's like, well, how did I even pay for it?
Dominoes is
the
always
income
unnecessary.
that I haven't protected. It's lunacy. It's lunacy. But I guess you're right there. And I think the more we do these kind of things, the more we share these best practices, it goes back to what Alex was saying about as an advice community coming together to share these examples, these best practices, these techniques, this, and do you know what I love? It's like listening to you talk then and listening to Ab's talk. You can see that we're all fairly passionate about what we talk about. And I think maybe that's something we ought to focus on more as well, because I think if we're not enthusiastic, if we're not passionate, if we don't believe in what we're talking about, how can you genuinely expect someone else to feel the same way? Right?
I completely agree. I think just to add, before we wrap it up, just to add to the expense comment, and I think you're spot on there, Matt, if we can share how we have sort of overcome that and produced a better outcome for a client, then you know, we can then work towards, you know, the overall objective together. But when I entered the market, I was specializing in protection. That's all I did day in, day out. And I found two things with the expense argument. It's, first of all, it's when you're saying something's expensive, you're usually comparing it to something else and it costs more. So for example, if I went to a butcher and got some meat, it would cost me a lot more than if I went to the supermarket. And I may turn around and be like, oh, that's a bit expensive because I'm comparing the two. But what you forget is that one is quality meat from the butcher and one is off the shelf from the supermarket. So a lot of the time when I found people saying this is expensive, that's because they had seen a cheaper version of that product, whether that's more payment protection insurance or a 1-year payout product versus a full-term product. So I think that's an opportunity to then elaborate even further on the difference of the product that you're advising versus what they may have seen. And secondly, I think it's, if someone says expensive, it's not expensive because it's actually by actuaries who make these premiums based on past claim statistics to an extent. So if I explain that and say, well, objectively, it's not expensive, it's actually very articulately priced from actuaries. So it's then down to this is more than the client thinks it's worth. So then I feel like that's an opportunity for me to actually go even further here and really paint the picture of what this product means and why paying £77 a month to protect something that may repay you £1,500 per month is actually a fair price. So I think when it comes down to expense, once again, I see that as an opportunity of going a bit further, because I feel like that's the client telling me I don't see the value, so I need to then add more to
Can I just add a point to what you said there? Because going back to understanding what income protection is there's also I think I don't know what the word I'm looking for is, but people seem to think that income protection is PPI insurance, and it's like so far from it. And I think that's probably another reason why people probably shy away from it, is because they think PPI and then they run a mile. And for anybody that is still like listening to this, is please, income protection is so far from what payment protection insurance is. It's unbelievable. So don't kind of get confused between the two, because income protection is a million times better.
And do you know what's interesting about that, Adam? And here's the thing, I used to work in PPI remediation, so I used to work in the complaints investigation for that. And I often said to people, you know, what's funny is there was nothing wrong with PPI as a contract. This is what's weird. Yeah. PPI itself, well, okay, other than those for self-employed, that's claim on the unemployment bit. But fundamentally, the product was actually quite valid in that it was designed to make sure you had a regular income if you found yourself unable to work. So it's similar to income protection. However, it was the selling practices that was the problem. It's the fact that it was included without the client's consent. It's the fact that explanations weren't given around how to claim. But also, obviously, it is a general insurance contract in that it renews every year, like your car insurance. And so, of course, when there's a large claims experience, or much like unemployment cover, you've seen now people are coming to me all the time with unemployment insurance inquiries, and their premiums have gone through the roof, or they're just pulling the product from the market, because that's what can happen when you take out a general insurance contract that renews every year. So you have to create a new policy each year. But the beauty of income protection is that it's a term assurance contract, like life, like critical illness, where you specify a term, i.e. to retirement. And as long as nothing changes and you don't stop paying your premiums, you know, even if you get ill, even if you claim, your premiums won't be impacted. Your ability to have cover won't be impacted, which is what you were talking about there, Adam, about with that client, Emily, having the cover and then reviewing it again. Well, look, premiums have gone up and you haven't been impacted because we took out term assurance at the beginning. So the one bit of advice I'd give to anyone watching is, if you haven't yet done it, today is the day. There is no day like today to go and get this done, because if you're fit and you're healthy and you're young, or you've got nothing wrong with you, now's the time to do it, because Otherwise, obtaining cover later could be predominantly difficult, could be expensive, could be impossible. So if you're in a situation where you're not quite sure and you think, actually, do you know what, that makes a lot of sense, I ought to do that, then it would make a lot of sense to speak to someone like Adam, speak to someone like myself, speak to someone like Abs, and we can help talk you through your options and look at those income protection contracts today. Really good point you made there as well, Adam, about income protection, how it sounds similar to payment protection insurance. And I've been talking to people about this as well. And I think part of what we're doing in this podcast is kind of dispelling a lot of those myths around the name, what it does, how it works. And I was saying to someone else the other day, it's like, do you not think it's time that we thought about what we name this product and maybe think of a better way to do it? And I said to someone, think of some interesting ways. And someone came up with lifestyle insurance, and someone else said, well, it's like permanent private furlough. And there's loads of other things you can use. Have you got an example of what you would name it if you could call it something else? Other than
human insurance.
Human insurance, yeah, exactly.
Human insurance, that's a good one.
It's true though, it's true.
Yeah,
you know,
it's very good.
People often say like your income or your ability to earn is like your most valuable asset. I often say it's not, it's time, right? Your time is your most valuable asset. Or you do sell your time, right? But
we'll understand what pet insurance is. So it should be human insurance.
Yeah.
Now, you mentioned a point earlier about awareness and how to, it's our responsibility to educate. I do want to just signpost to anyone watching this, and I know, Adam, you've actually just done a video for them, but the IPTF, which is the Income Protection Task Force, you can go to iptf.co.uk. That is a force that's been set up. They've got a website, loads of resources, both for advisors and consumers, all about income protection, how it works, case studies, videos. And ironically, Adam's just recorded a video for them, haven't you, talking about why you talk about income protection recommended. So if anybody does need any information or resources about income protection, that's probably a good place to start. So it goes back to what you were saying, Abs, about making sure that we educate as many people as possible and share best practices.
Talking about that video, and someone was going to mention earlier, let's take this back to my journey, because that was one of the questions they asked, what kind of got you into income protection? So I worked as a single-tied mortgage broker for one of the largest estate agencies in the country, and we were only told to do life insurance and critical illness. I didn't know any better. You can probably work out who it is. We won't mention any names. So now I got made redundant in the height of the recession. Ended up working in a call centre doing what I'm doing now, which is where I learned my trade. And I was like, what's this income protection? And as soon as I looked into it and understood the contract, the first thing I thought was, hang on a minute, why haven't I got this? So I was blown away by how amazing that contract was. And the first thing I thought was, why haven't I got this? So the first thing I did was set myself income protection up back in October, November 2008. And I've had income protection since. Thankfully, I've never needed a claim on it, and it should be the biggest waste of money in my life. But I've got life.
Well, you've had peace of mind for 10 years. That's invaluable. You've had peace of mind for 10 years.
Yeah.
That's invaluable.
But if you say now, it's down which you get first. I would get a bit like life insurance and these first. And I'd make sure I have my protection.
I'm not sure if that was just me, but you're very fuzzy on the line.
You sound like a Dalek. It's brilliant.
It's done that on purpose, I think.
I think, to be fair, guys, I think we've kind of covered up a lot of points now. I mean, I'm sure, listening to us speak, I reckon we could probably keep doing this all day long.
Yeah, for ages.
We've got so many stories to share. I mean, I haven't even shared that story with you, what got me into income protection in the first place. But I think we've probably given people plenty to consider and plenty to talk about. And I'm really, really grateful for you coming on today, Adam. And it's been wonderful having your insight and learning more about what got you into income protection and why you feel it's so important as part of any sort of financial plan. And also great to learn from you, Abs, about how from a financial planning point of view, how obviously making sure that you've always got regular household income is integral to achieving those lifetime goals that you've got. And it's not just about the here and now and keeping the lights on and feeding yourself. It's also about making sure that those plans and goals that you set yourself for life, because those are so important, right? That's the reason you actually get up every day, that, that is an integral part. And obviously having that regular income enables you to achieve those goals. So I think it's been a really, really worthwhile session. And again, thanks, Adam, so much for taking the time to speak to us. Abs, as usual, mate, the voice of reason and the voice of intelligence. Great to have you.
Doing my best.
And I think we're going to book the next one in very soon, aren't we? I think we've got another special guest, Settle Meta, is coming on to talk to us about his perspective, how he thinks the protection world can be improved, what's going on there. So it'd be really interesting to get him on board. But again, Adam, thank you very much. Thanks for watching the Broker Bros podcast.